So, friends, continue with our quarter two review performance, and now we are going to talk about two other important stocks, Wipro and Havells India. These two stocks has given result yesterday. Let us deep dive today. Both the stock is up, but let us understand as an investor what you have to do. So, first we'll take about Wipro, guys. Wipro overall no is been laggard over the no all the other IT major firms, whether we take TCS, Infosys, or HCL Technology. No, it has not performed in last few years, and the reason is that that performance was not that on the profit point of view and also sales point of view. Again, the guidance was always lacking. But in last 1 year, the stock has performed almost more than 34%. And the reason is somewhat you can say pullback rally is coming, and somewhat the Wipro result quarter two is not so bad as it used to be over the time. If you see in last 2.5 years, whenever I used to do a quarterly performance of this stock, no, it always used to be a laggard compared to other IT firms. So when we talk about this time, the stock has performed okay. But if chalo, let us what we'll do, we'll understand the first what is the main area to be focused business model thoda samajh lete hain, then we can focus on each and every. So when we talk about that main business model is IT service only, okay, which is almost 99.7%, and almost 0.3% is the hardware product. Okay, so focus is on IT services. Again, in IT services, guy, 89% what they are getting revenue is from outside India, almost 67% from USA, and then we talk about Europe is almost 27%, rest of world is almost 11%, including India. So major contributor is coming from USA, and in that also BFSI is almost 34%. Okay, and BFSI means nothing, banking financial services. Okay, that is almost 34%. When we talk about consumer, 19%, health 14%, in technology 11%. Now that is what major of their services coming from BFSI, and that is nothing but the banks located in USA, Europe, across financial institutions located across the world. Now, if there is some problem in that area, then this company will have a direct impact. It's not only Wipro. It's when we talk about other major IT firms, the same persist, and that is what you have to understand, guys. Now, because the rate cut, what has happened last time, almost a month of September in Fed. Fed has cut that 50 basis point. That is why the new pullback rally has come across BFS, and which is helping Wipro currently. Okay, and that is why you can see the revenue growth is up by 0.6% quarter on quarter. Of course, it's not a big growth, but somehow they are growing. Okay, when we talk about they have already beat on the margin, and again they are having a healthy, good, large deals also, and that is what is helping currently, basically Wipro. When we talk about the revenue growth is almost up by 1.3% on constant currency. It is also given up, as I told you, 0.60% upside. Okay, on the growth point of view, sales point of view. Okay, again in that also telecom growth has been more, almost 3.5%. BFSI 2.7%. So telecom and BFSI are the main contributor. But who is the laggard? The laggard is ENU and manufacturing. That is engineering unit, and that is minus 3.7%. And manufacturing is minus 2%. This is what is bringing the revenue down. Other factors are actually bringing the revenue up. Okay, geopolitical wise also, no, if you see the even the USA and Europe is little bit flat, but now it is recovering, so that is a positive sign. And again, guys, understand that top 10 accounts has gone up by almost 3.1%, and that is what is helping Wipro currently. Again, the deals wins are quite robust, and they are going to maintain in future also. But sometime it may happen that what they want, no, the execution is the main thing. Correct. Whether they are able to execute properly, and at the end of the day, continuous flow will be there from the other nations. That is the most important thing, and so the next Fed policy will play a big role. Again, as the expectation is that no, basically in future also more and more deals are going to come, so revenue growth from here no will be slightly better compared to what it used to be earlier. Of course, the guidance is not so great, between -1 to 1%, but somehow no, it is better than what it used to give earlier. Again, headwinds will remain on the client in Europe, no, and all that. Still they are recovering. US is doing better than Europe, and that is what is actually troubling little bit Wipro, that when the Europe is going to come. See, overall, when we talk about Wipro, the one of the biggest concern was earlier that their important management personnel are getting retired or no leaving the company. When we talk about the CEO left, okay, CTO left, delivery base head left, ERP head left, and all these guys when they left last quarter, no, that is what they shake the completely Wipro enterprise. And now the new management is there, but new management will take time to grow, you know that. And that was one of a big point no highlighted last time, that suddenly big no personals management personnel are going, key management personnel are going out of Wipro, and which was actually hurting the stock also. And attrition level was quite high on the higher management point of view, that way to keep in mind. However, keeping all that factor into consideration also, and whatever, the improvement is much better compared to what it was to be earlier. Even from here, the EPS may grow by, may not be on 20s and not like, but maybe single digit higher side it may grow. And of course, next year it may grow by mid teens. But as after that, high digit growth may happen in future, and that is what will keep this stock into focus. Overall, when we compare with the other, you can say the TCS and Infosys, big companies, against that also this company is available at a much lower valuation. Currently his PE is around 23 times. What is TCS? TCS is around 31. Infosys is also around 30. So you can say, and even HCL is much higher, around 30 only. So compared to that, these companies among the big four, this is the company which is available at a very cheaper valuation. But the reason is simple, guys. The other three companies outperform in sales and profitability point of view over the years, and that's why in last 3 years, if we talk about no, how much Wipro has given return in last 5 years is around 16%. HCL is around 27 and Infosys is 20%. Okay. Now, Wipro, if you talk about the major growth is coming in last 1 year, but that is 34% jump in prices coming last year, because now it is getting rally. Now we have to see how much this rally is going to continue, correct? If it is going to continue, not rally, but the performance. Of course, if the performance goes up, your rally is going to go up only, correct? So hopefully if this performance continues, that will be good for you. But as an investor, what you have to do, again guys, here no, I'll tell that no, take your own decision. This is just my opinion. The rally just started, and again, I'm not, whether it will sustain, don't sustain, I don't know, but I am not too much bullish. Honestly, I am not bullish on Wipro stock. I was never been bullish on the Wipro stock. Again, I'm a SEBI registered research analyst. Do your own analysis before investing, guys. If you like our the way we are researching and all that, no, you can check it our the premium no membership, the stock recommendation service what we provide, where people are getting lot many crazy ideas and they are earning a lot. So check it if you want. The portfolios are available. Again, guys, do like and share this video. Before I go to the next stock, the next stock is Havells India. But do like and share this video if you are liking it, and do subscribe to our channel. Okay, now let us talk about the Havells India. Wipro, I already told what you have to do. Again, take your own decision after doing a proper analysis. Now, talking about Havells India, it's been a consistent compounder over the years. Okay, it's been giving you a good return over the years. Majority of the shareholder has earned a lot through Havells India in last 15 to 20 years, guys. And the main reason is that no, it is like a no, the business is one type of evergreen business, and the construction activity and all that, no, festival season coming, and that is what helping currently Havells India. Havells India, let us understand the model first, how it operates, then we'll talk about the various verticals also. So Havells India, you know that majority revenue is coming from cable division is 33%, electronic consumer division is 22%, like fan and all that. Okay, cables, and you know that cables what they are giving, their competitor is this Polycab and all that. Okay, similarly, Lloyd business which they have acquired for AC almost, I think 5 6 years back, is 16%. Switchgear is 13%. Lighting and fixture is 10%. So majority is coming from the cable division. Then the electronic items we are talking about. Export is around 4%, which is going around 60 plus countries. Now when we talk about no, again the which are the products which is doing well, then MCB is 19%, switch is 13%, flexicap cables 16, Fans are is almost 20% and water heaters is 20%. So electronic goods plays a big role when we talk about the product wise, which is doing good. Again, overall guys, most of them, more than 90% of the production is happening in their own factory, and that is where they are able to control the cost and all that. Employee retention is almost more than 83%, okay, and 47% are with company with more than 5 plus years. Why I'm telling you, because this is how you are able to retain your main talent, the very good talent, and that is what helping Havells. Havells, as I told you, has been consistent compounder over the years. Okay, when we talk about Havells India, the top line growth, when let us understand the quarter two review, is almost gone by almost 16.5% year on year. Okay, and however, EBITDA basically was little bit down compared to the estimate of 15%. The one few reason we'll talk about why the EBITDA is down. First thing is the raw material prices. You know that metal prices gone up, so for raw material volatility for wires and cables, their margin, which is their main segment, almost 33% is coming from that. That the raw material prices gone up, and as a result there was a hit. Again, another was that they have already invested in lot many alternate channels and emerging channels with ECD, like talent, in-store visibility, innovation, R&D. They are doing a lot. Again, higher advertisement and promotion they are doing for the festivals, and now Diwali is coming, and as a result they are also focusing that electronic goods and all that. Hopefully it will be a good Diwali for Havells India also, and most of the you can say white good consumer goods products. These are called white consumer good products because at the end of the day they are consumer facing only. Okay, again, margin weakness is there, but over the years this stock may give you a good volume return of 16 plus above sales point of view. Even you can say EPS also may grow around 20% plus above. The way they are actually doing the business, of course this company has gone up a lot. Then also you said 20% is lower compared to what Havells used to do over the years. But yes, this is the thing, but little bit slow down is there, but not so bad, not so bad. Again, the commentary of the management is quite good. As I told you, that Diwali season is going to come, and which is going to add fuel to the Havells sales and profitability. Again, the demand partly is basically weakened by restocking, but stocking is there already. Again, the new cable facility they are going to operate from September 24, which almost started, will give you more growth in the second half of the year. On raw material, they are saying that basically the margin dip whatever has happened, by November December, that will be in control. So raw material prices will be in control, and then again the margin may go up. Overall, as I told you, guys, this stock has given a consistent return in last few years, and overall if you see the compounded sales growth is almost 21%. However, overall if you see in 5 years they have given almost 21% return. The profit growth is around 8%, not so much, but because it is a white good company, consumer guys, always an high P is there. The problem is that only the P ratio is quite high. Havells India P ratio is almost 80.9. The competitor Compton gives and all that, they are having 56. Wonder Electronic also even a very high P. High P will remain because they are consumer facing, as I told you again and again. And these companies will always attract more premium. When we talk about ROC, ROE, it's around 17.5. That is ROE, and 24.4 ROC, which is quite good. If you see the last over the years return also, sorry, sales and profit growth is consistent. So any type of deep coming in this type of company will always give a good opportunity to invest, because at the end of the day guys, see it always economy facing. If economy is going to do construction activity, going to do more and more houses and all that stuff, okay, this type of goods, white goods company will always do well. Okay, and at the end, few other big players like Havells, Polycab, or Crompton Greaves, and all that. They are the few players who hold the market share. So overall, this in this type of company you may much more you can say no, the predictability of the revenue generation, the profit generation, that you have to keep in mind when you are investing in this type of company. Okay, so that is why FMCG white goods has always been favorable and it has given a great return over the time. Again guys, currently I'm not saying that you buy this stock, do your own analysis, but yes, this looks good, better than no any other company, and because the demand is always there. So guys, hope you like this video, guys, hope you like this, and if you have any related question related to stock or sector, put it in the comments. I'll try to give answer. I am continuing this type of quarterly to review many more stocks. I'm going to give you for the next video. Please do like and share this video, and again guys, click the below link and attend our workshop. It will help you a lot to understand how to do analysis. Okay, so thank you very much, and I'll see you soon next time. Bye bye.